Hi, and welcome to this week's look at the major news stories in the week ahead. And a packed agenda for this week, with central banks in focus as markets await the Reserve Bank of Australia's rate decision and monitor signals from the FOMC. At the same time, upcoming UK GDP figures and Canadian employment data will offer fresh insights in economic resilience in the face of global headwinds. And with the 9th of July US tariff deadline approaching, trade tensions are once again front and centre, threatening to fuel volatility across currencies, equities and commodities. So let's take a closer look at the data and decisions likely to drive the markets this week. Well, we start with the Reserve Bank of Australia, which holds its next policy meeting on the 7th to 8th of July. The official cash rate decision is expected at 7:30am, that's GMT plus 3, on the 8th of July, followed by a press conference at 8:30 GMT plus 3. Inflation is cooling. Trimmed mean inflation eased to 2.4% and headline CPI dropped to 2.1% year on year, both now within the RBA's 2 to 3% target. A weak retail consumption and just 0.2% GDP growth in Q2, with per capita output shrinking, are fueling expectations of another 25 basis point rate cut from 3.85% to 3.6%. Still, the RBA could proceed cautiously, pointing to a tighter labour market and global risks. At its previous meeting, the central bank cut rates by 25 basis points in line with forecasts. While the move was expected, it caused notable market volatility. The Australian dollar weakened against the US dollar, and dovish forward guidance added pressure on the Aussie. Okay, it's the UK's turn this time, and it's the UK GDP data due the 11th of July at 9am GMT plus 3. Now, the UK economy grew 0.7% in Q1 2025, its strongest quarterly performance in a year, and the fastest growth among G7 nations. The expansion was led by surging home sales, strong manufacturing, and a pre-tariff export push to the US. However, monthly GDP for April contracted 0.3%, the sharpest decline since October 2023. The pullback was driven by weaker services and industrial activity, weighed down by new tax burdens and tariff uncertainties. Still, the rolling 3-month GDP figure held at plus 0.7%, supported by gains in services and production. The OECD now forecasts UK GDP at 1.3% for 2025, while the IMF lowered its projection to 1.1%. Rising trade tensions and domestic fiscal constraints are the major risks. May's weaker than expected numbers may put pressure on the British pound, so keep your eyes and your ears open. Well, it's the same day, 11th of July at 3:30pm GMT plus 3, we get the unemployment rate for Canada. It's key labour market data, obviously, and a potential trigger for Canadian dollar volatility. Canada's unemployment rate rose to 0.7% in May, up from 6.9% in April. That was its highest level since September 2016, excluding the pandemic years. Unemployment affected 1.6 million Canadians, a 14% increase year on year. Now, according to statistics in Canada, this isn't driven by mass layoffs, but rather by slowing job creation amid a growing population. US tariffs have already impacted hiring in manufacturing and metals, and analysts warn the jobless rate could reach 7.5% this summer. The Bank of Canada is closely monitoring these developments, with Governor Macklem warning of potential spillover effects from trade-exposed sectors into the broader economy. With the next rate decision scheduled for the 30th of July, the upcoming data could generate even greater market volatility than we saw in June, so don't forget your risk management techniques. Right, a few additional events this week could also drive significant market volatility. One key focus will be the FOMC Minutes released ahead of the 29th of July meeting. These will offer valuable insight into policymakers' thinking and may provide early signals on the Fed's next move. Expect potential reactions across the US dollar and major US indices. Another significant risk is the 9th of July tariff deadline. By the 9th of July, the 90-day pause on President Trump's sweeping reciprocal tariffs expire. These tariffs, starting at 10% and rising up to 50% for select nations, are set to snap back unless bilateral trade deals are finalised. If tariffs return, expect renewed volatility across equities and commodities. Well, that wraps up this week's market insights. With critical economic data, central bank decisions and geopolitical catalysts ahead, traders should prepare for heightened volatility. Stay tuned to FX Open's news and analysis section for real-time updates. Thanks for watching, and as always, good luck with your trading in the week ahead. Bye for now.